Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets for Sunday the 25th of July, special weekend edition. Mostly looking at the best risers of the year, so nominally baggers or more, sometimes multi-baggers, but starting off with 88 Energy, where you can see that on Thursday we broke that little line of resistance that we had from the beginning of the month, around 1.8 pence, and while we're above that, looking for a retest of July resistance, July peak through 2.5 pence perhaps by the end of next month. A stop loss, I suppose, the best one at this point would really be an end of day close back below the 50-day moving average, although obviously there is some support there for the stock towards 1.65 pence, but probably one would have to allow down to the 50-day line, given that's where support has tended to come in for the shares since the end of April. Moving on to Ferro Alloy, which hasn't appeared for quite a while, actually, in terms of the news. I think the last update a little while back, but maybe it's overdue now. Here's the situation: is that we had a wonderful vertical move there in March, sideways consolidation since then, so let's say 25 to 40 pence the range. In terms of looking for a new trigger on the upside, you want to see that resistance line there broken at 38 pence if you're cautious. Otherwise, you would assume that with the break of that line there from June, we're actually ready to head higher. Obviously 38 pence and the initial target, and then retesting April resistance at 46.5 after that. Big picture target, this stage is a little bit difficult, but it could be up towards a best case scenario target as high as 55 or 60 pence. If that rising trend channel that I've just drawn from March is actually what the stock is occupying, which at the moment looks like it may be. But 60 pence, I suppose, 2 to 3 month target, up to 40 pence maybe by the end of next month. And the stop loss back below the recent bear trap low, which was at 27.25. Moving along to another stock which has had a great 2021 so far, Gattaca. And here, even though the shares sort of slipped out of the rising trend channel that I previously drew, they've actually, I suppose, really bear trapped out of that, or back into that channel, back above the 50-day moving average at 209 pence. And while we're above that, looking for a move over the next couple of months as high as £3.60 at the top of the March trend channel there, that resistance line there from earlier in the year. If you want another bit of sort of technical input there, then breaking that line at around the £2.50 level should then trigger a decent move to the upside. But that little bear trap that we had last week below £2 has given fresh momentum to the shares and looks quite encouraging. Another winner from the start of the year is coming up soon, GS Technologies. And here we've got a situation where we've had that sort of quite a long tail after peaking out there at or up there at 4.5 pence, narrowing channel which was broken last week. Probably want to see still an end of day close through the 50-day line at 1.35, and then that could lead back to April resistance at £2. Stop loss back below the recent support around 1.1, so sub 1.1 should do the trick, and maybe if you can afford it, down below a penny. But I think that after so many months, the shares are probably done their consolidation for now. On to HeliumOne, which has been a great mover here from, I suppose, the beginning of April, really the best part of the sweetest part of the rally. So April was the golden month for HeliumOne. Broke a resistance line there from May around 21 pence and then rallied to 28, which was nice in June. But the situation now is that we're hoping that the shares will maintain the floor of this rising trend channel from back in December. That's around the 21 pence level. If you're looking for a fresh trigger on the shares, then that would be an end of day close through that July resistance line at 23 pence. And that could then take the shares up to maybe a September target as high as 38 pence if we get a decent follow through on that particular move. Plus points here are the way that the 50 and 200-day moving averages are rising, and the support points that we've had since, I suppose, the start of the year have all been at or above the 200-day line. So risk, I suppose, of a move back to the upper teens, but ideally we hold the 20-21 pence area and then break higher up towards the upper 30s on HeliumOne. Moving along to Codel, which I know has its myriad fans. Here the shares broke out of the rising trend channel that we had mapped out for them back in sort of May, June, sort of double top near 0.5 pence, but still looking actually quite encouraging. The reason for saying that is that we've got new support for the stock coming in basically at old resistance, so that was around 0.36, and I think we can say now that while we're above that particular level, we're looking for fresh move to the upside, perhaps not as intense as what we were looking at before, but still there's a rising trend channel that you can draw from the end of March. Floor of that channel towards the 0.37 area, and certainly while we're above 0.36, 0.37, looking for a new move to the upside towards 0.7. If you want a momentum trigger again, then you'd wait for that line of resistance from the beginning of the month to be broken around 0.42 pence, but still looking pretty solid for Codel at the moment. On to Petroneft, which was a bit of a silent, a dark horse, let's say, over the course of January in terms of the really sharp rise that we saw. Shares still within the rising trend channel that previously had for the stock rather, and top of the channel they're heading towards 5.5 pence. That could be hit maybe by the end of September, especially if we hold the current 3 pence to 3.2 pence support for the shares. So looking pretty solid and well behaved there for Petroneft. One of the surprising names to do well so far this year is Premier African Minerals for various reasons. Here we've had an attempt at breaking that line of resistance from last month through, I suppose, the 0.23 area, or 0.21 area rather. While we're above the recent swing low there, back at 0.18, still looking for a move to retest the top of the range around 0.28 over the next few weeks, perhaps by the end of next month. At this stage, only well below 0.18, really delaying the upside scenario for Premier African. Stock which I haven't really looked at much before, but it was just too good to resist, as it gives us a bit of charting education. Here we've got Reach, which delivered in last September one of the sort of the favoured buy triggers that we have, a gap, unfilled gap through resistance, which was done there through the, what was that, sort of the 50-60 pence zone. The shares then did another one, which remained unfilled in January, and all the while we remained within this rising trend channel from October. Top of the channel, they're heading for £3.65, and that's valid while we hold above the recent support. I suppose actually while we hold above £3, which was resistance earlier in the month. So above £3, looking for 3.65. Perhaps by the end of next month. So a pretty chirpy situation there, and rather smooth, well, smoother than most of the sort of strongly trending stocks that one might care to see. Sorium is back here today just for a sort of an update. It's been one of the favourite situations, especially over the last couple of months. Once again, we had that unfilled gap to the upside through resistance. In this case, it was 3 pence. And the shares have made good on that, really made good on that, tripling effectively over the course of June. Consolidation, not too bad either, sort of basically retracing a third of the gains and breaking that line of resistance from June as well, around 7 pence. The longer we remain above 7 pence, the greater the chance of a fresh move to the upside up towards 14 pence, perhaps as soon as the end of September. If you were looking for a momentum trigger, probably an end of day close above 8 pence would be the one, so that you're not sitting around with a dead stock. Tavistock is next on the roster, and here you can see that even though this is a relatively illiquid situation, it's worth having a look at it. The unfilled gap to the upside, obviously rather incredible in terms of what we've seen there. That happened last month, and the situation now really is that there's a rising trend channel that will hopefully be able to draw in a minute through the 8 pence to 9 pence area. This is coming up now, and basically we'll see that the shares, while they remain above I suppose the top of the gap at around 4.25 pence, the upside here is much as 8 pence by the end of September. It's drawing the floor of the channel there, which is also roughly parallel with the 50-day moving average and the top of the gap. So above 4, looking for 8 pence on Tavistock. Finishing off with one of the better stocks of the year, and one which seems to be blessed both fundamentally and technically at the moment. Sort of relatively smooth ride for the shares, and plenty of fundamental backup there with sort of almost incessant RNSs for the shares. Here we see the way that Zephyr has bounced above the 50-day moving average, unfilled gap to the upside, one of our favourite signals. That was well maintained, and while we hold above the recent 5p bear trap low, looking for as high as 9.5 pence, perhaps as soon as the end of next month, or maybe going into September, but there's a chance that we might even see that by the end of next month. If you're looking for the momentum trigger here, that would be an end-of-day close through around 6.6 pence. And that should lead or sort of provide a decent kicker for a move towards 9.5 pence over the forthcoming, or the weeks after that particular break. That's it from me today. More updates tomorrow.